Okay, with the S&P 500 ripping higher after the latest CPI report, I wanted to start with the setup coming into today. And so we show this chart every month right before the CPI number comes out, just showing what the S&P 500 has done 2 weeks after the report over the past year here. And so as you can tell, in red, the S&P 500 was down 2 weeks later, in blue, up 2 weeks later. And so as we know, the last 3 times the S&P 500 was lower 2 weeks later in August, September, and October. Not a surprise, of course, since we're in a downtrend basically that entire time. It's also important to realize that the S&P was sporting an RSI right around the midpoint all 3 times, which didn't really give us an edge either way, but never really could get above that. Another indication that this uptrend, or this downtrend, excuse me, was still going lower. Now we come into today with an RSI around 61. Not overbought by any means, but of course, this was stretched even before today, right? Up about 8%. It's not the best setup, quote unquote, but it's all about the reaction to the news, which of course was good. Now, let's go back to what happened in June and July. Very interesting, because the S&P came into both of those reports with overbought RSI readings both times, and 2 weeks later, higher each of those times, which shows us that market was in an uptrend, and an uptrend can support overbought conditions for longer than we think. And of course, those are the times when investors buy the dip, right? And so that's how this continued higher. Important to remember going forward after the market deals with this big gain for today. And so looking at now the action, including today's price action, is going to be the 5th 1% advance of the market and hold it in the last 12 trading sessions. Much different than what happened in the 3 prior months. And we can see this more clearly here just by coloring different trading environments, where again, 5 advances of 1% or more in 12 days, 4 1% advances in 12 weeks here. Needless to say, very different type of environment now compared to here. And again, this all started with those 3 1% gains in the course of 4 days. We had 3 and 5 days here at the end of May to June, which kickstarted a longer, more mature rally, which of course the hope is again for here. And we can go back to what happened in April to June, pretty consistent, had a handful of 1% advances as the market was able to, set a foundation and move higher from there. Now, from a pattern perspective, start talking about this potential as the market was rallying the early stages, with eyes on this spot as a potential pausing area, which can then form the right shoulder. It did, again, from a 2-hour time frame, had the marginal breakout on Friday, consolidation yesterday, and of course the extension today. So the best thing about this, of course, is that now we're further extended from the breakout point, which means that the market has a cushion to back and fill and still have this upside target near 46.75 in play. Now, from a longer-term perspective, through last week, 2 good up weeks amounted to a 2-week advance of more than 7%, which has been very rare going back almost 10 years now. This is from 2014. And so it's only happened 6 prior times. And as we can tell here by the colors, 5 times the market continued higher. Only 1 time did that mark a top, and that, of course, was in the initial stages of one of the first bear market rallies we saw in 2022. The other times, most recently, of course, as well, right after the low from October 2022. So it just tells us, again, another indication that bursts of buying, strong movements on even a weekly basis, can then kickstart bigger moves, as opposed to marking the end of them. And so lastly, just look at sentiment. Of course, very different ways to get this, but one of the ones we should always pay attention to is the CNN Business Fear and Greed Index. And just today was the first time that it actually moved out of fear into the neutral zone, right? Which is important to consider now, because again, the market is up about 10% from the lows already. And if you go back to all the way to the beginning stages of the March to July rally, it first hit neutral at the end of March. as well. So just about 2 weeks into the move, just about 2 weeks into the move here, with a lot more to go. Something to watch. And again, there are other short-term indicators that suggest it's stretched right now, which is true. But again, from a sentiment perspective, it is not yet, which can set the stage for continued rally into the end of the year, which we'll be watching closely. That's it for today. Don't forget to check out these other videos we have and subscribe. And I'll talk to you next time. Thank you.